After nearly 4 years, investors are still holding their collective breaths every time inflation data is released. Why it still matters in this week's Fastest 4 Minutes in Finance. Hello, I'm Scott Inman. Well, we are all still feeling the cumulative effects of the country's most recent high inflationary environment. The U.S. inflation rate peaked in July of 2022 at 9.1% year over year. Since then, it has been tamed. New data released this week showed the December Consumer Price Index climbed just 2.9% year over year. That certainly is tame compared to 2022. Even better news in that report came in the Core CPI number. That strips out the costs of food and gas, which tend to be more volatile. The Core CPI rose 3.2% from December of 23 to December of 24, and it had been stuck at 3.3% for 4 straight months. Now, that may seem slight, but the news was celebrated by investors as the markets took off on Wednesday when the news was released. So why are investors still so locked in on inflation? It seems pretty obvious we have nowhere near the inflation problem we had 2.5 years ago. Well, it's because inflation is still connected so firmly to monetary policy, and monetary policy is connected so firmly to business activity, or at least it's perceived to be. The Federal Reserve has a stated inflation goal of 2%. While they look at other economic data, the general belief is that as long as inflation is north of 2%, the Fed will be slow to cut interest rates. While we are definitely close to that goal, we aren't there yet. And every time inflation data is released, it's either stuck or even ticking up slightly. So investors are worried that either inflation will make a comeback or that the Federal Reserve will delay cutting interest rates, or both. There was even worry that the Fed might actually raise rates again this year if inflation persisted above their 2% target. It is really a case of a manipulated economy versus an all-out free market. How can the Fed really control the economy anyway? Take a look at how divergent inflation really is. This chart from LPL Research shows the overall CPI year over year in blue, with the inflation rate of goods in orange and services in gray. And you can see all inflation is not created equal. Goods inflation was literally off the chart during the COVID pandemic. We were all stuck at home and we were buying stuff. You can see the prices of goods has been actually dropping for some time now, but prices on services have remained more stubbornly high. LPL chalks this up to rising wages, substantial wealth effects, meaning household net worth has increased from the stock market and home prices rising, and upper income earners are still driving spending. In other words, the consumer is going to do what the consumer does. Bottom line, we will always have to deal with inflation. And while institutional investors may drive market volatility in the short term, worried about how it might affect policy decisions, you can't afford to let it spook you. Your plan for true financial independence is about your economy, not the economy. Thanks for watching. Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.